how should we play the onsetting of a stable government over the next 1 or 2 years. Nandan Chakraborty, MD Institutional Equity Research, who is our market master today, joins us from Axis Capital. Thank you very much, Nandan, for joining us. I have with me your, what to buy with Modi at the helm report. But detail to us, do you expect substantial benefits simply because of political stability? Will a stable government mean that all these endless contractual tangles we have in the infrastructure space will go away in a hurry? These are legal tangles.
See, the few things as an introduction to that. See, when there's a lack of political stability, typically what happens is a patchwork of solutions. So you're trying to do a patchwork of one thing, and then another problem crops up. So it's never a permanent solution, and forget about permanent solution. Even the short-term solution never happens. So what we expect out of a stable government is certain long-term solutions which come into play. And that's I think that's the main reason why people are so excited about a stable government. Because we've had a patchwork of solutions for too long a time, and we are in such a big hole fiscally that I think long-term solutions that many of them are there in the manifesto of the BJP as they've come out is something that we're really looking forward to. So having said that, let me lay the context in 3-4 different ideas. One is that the most important driver of the Indian markets is global markets. Let's not forget that. Let's first start with that. So once global markets are good, what happens is capex confidence in India as well as money flow comes in. And with China not doing too well, etc., that's an additional kicker. But leave that alone for a moment. So let's first think that global is the most important thing. Leadership of India then enables you to capitalize on that or screw up our chances. So that's the first thing to keep in mind. Second thing to keep in mind is, you see, what happens is the market is something like an S-curve. So in the initial stages, when there's a catalyst, the market screams up. Then it sort of slows down. Then again, sometime later in a few years, it reaches the peaking signs, which is again an accelerating move. And it's very easy to miss the distinction between the two, because both of them are stages where the multiples increase more than the EPS increases, which is why you get frantic. The market has moved up so much, maybe we're already in a bull peaking sign. And it's very important to remember that the only difference between these two phases is the symptoms of the phase. So when you have peaking signs, you have a lot of IPOs and other issuances coming into the market. You have everybody talking about stocks of various quality. You have capex for things that you don't need. You're planning for 10, 15 years in the future, etc., etc. So these are all standard market cycle symbols. You just have to keep your cool and figure out whether you're seeing any of the peaking signs or not. And today we don't see any.
Okay.
So don't get scared just because the market has gone up in such an accelerated mode, because it is not the same as the peaking market. So that's number 2. Number 3 to remember is that BJP has a tough job on hand, and it has 2 different segments to cater to. One is, let us call them the ones which are more pragmatic, which is industry, stock markets, industrialists, your middle class, upper middle class and so on, literati, etc. I think they will have a little more patience with the BJP government, because they are aware of the mess that we are in, and what we expect out of the BJP is basically good governance and long-term strategies and not patchwork solutions. So the things that they need to do, he will have to make a whirlwind tour of the states and see that all the states are in order, because are with him, and the opposition is with him, because a number of things will require cooperation with the opposition. For example, to get things done in the Rajya Sabha, where they don't have a clear majority, and to get the states into action, because many of the very important reforms, whether it's agriculture, whether it's land acquisition and so on, environmental clearances in totality, a lot of them are related to the states. So I think we'll give them a lot of patience, and we'll say this year is the year of policy. Next year onwards is EPS growth, and not this year. However, look at the poor. The poor have, in the previous BJP avatar, the poor felt completely left out, because the rich were, the trickle down didn't happen. And therefore, as a natural consequence, the Congress came and overcompensated and basically threw money. Fair enough. I mean, it was a natural consequence, maybe overdone. So now that the pendulum has sort of swung somewhere in the middle, BJP has to ensure that the poor don't feel left out in the first year. And they are not going to have the patience to say that I used to get so much, whether it's Narega, whether it is food, etc., and suddenly it's becoming so much.
Right.
They are not going to have the patience of somebody else. Which brings me to what this budget can do. So the poor will have to be taken care of, because the poor need two things. One is inflation, which will be difficult for the government and RBI to control at this stage because of commodity prices and lots of other issues, interest rates and so on. And the second is jobs. So I think the focus of the government, number one, will be on whatever jobs it can create, and therefore what tax breaks it can give to the export-driven or the high labor segment sectors, such as construction,
And
textiles,
Nandan,
chemicals, and so on. Number two, the excise duties on certain things, they don't cost much, so some of them may be decreased. Third is that the rupee. It'll have to see that the rupee doesn't appreciate too much, so that the export jobs are not lost.
Yeah.
Okay, so Nandan, I'm sorry, I'm just going to interrupt you. I'm going to interrupt you a tad bit, because I want to not forget a couple of points that you made. You said that you don't see this market peaking out at this juncture. So what should one really be doing as far as stocks are concerned? I mean, the big move has come in the mid-caps in the last couple of weeks. Do you see a lot of opportunities in the mid-cap space? And if yes, what do they look like?
I'm sorry, but I'll have to go back into that, because if you go directly to an answer without knowing the context, you will. My best advice to you is invest in a mutual fund. So I think if you either need to be prepared to know the context or invest straight away in a mutual fund, because it is a profession by itself. So I'm sorry, I'll have to continue before I answer that question. I'll come to that. So second is in terms of the budget deficit. It is in a precarious condition, so I think what they will have to do is continue with the diesel price hikes and do some sort of divestments and try to reduce the subsidies as much as possible. At the same time, they cannot afford to reduce the subsidies on important items like fertilizers, food and stuff like that. Which is why I brought about why these two segments are important. Third thing, to keep the animal spirits high, they will have to do something about the capital markets, which may be in terms of the FII limits, the capital gains taxes, and seeing that there are no retroactive tax laws, etc. The fourth thing to remember is that Modi has been more eastward looking than westward looking, and therefore the tie-ups that we see with the Chinese and Japanese are going to be even more important. And the reason I say this is that a lot of commodity prices in India, a lot of commodity jobs will have to be addressed by the government, so that there's more employment. At the same time, you might have to open doors to China for many of the low-end items. So this is something very important to remember. So if you are going to blindly buy mid-caps and you don't understand these, it's going to be a problem.
Okay.
So
finally, in this main context, is that things like agriculture, defense, DMIC, which is the industrial corridors, railways, and tourism. These are things which the manifesto has said will be a focus. So when you're choosing mid-caps or whatever, some of it has to fall within that.
Okay.
The second, coming into what you were talking about, mid-caps and so on, I would like to divide it into three sort of strategies. First of all, as I said earlier, the multiple goes up before earnings growth goes up in these two stages, as I mentioned, in the S-curve. So in the first stage, what happens typically is sectors which are typically lower multiple than the overall average go up the first. So one is mid-caps, obviously. Second is PSUs, and the third is levered companies. So if you start with mid-caps, the reason that they go up is basically that what happens is, your sales growth, margin growth, your talent growth, clientele growth, and improvement of the balance sheet all happen together. But it cannot be discriminate. You have to, one has to realize, the context that I have laid out before buying mid-caps. And I would strongly recommend, there are very good mid-cap funds which are run, this thing is for mid-caps in particular, there are, I think, greater dangers than large caps. So I strongly recommend that people put their money in mid-cap funds rather than invest in mid-caps on their own, because they are diversified and there are professionals who are doing it.
Yeah, but what would be your own?
And the reason I'm saying.
Yeah, but what would be your own mid-cap picks, Nandan, at this juncture? Because we have seen, as you said, many of them run up already.
Lata, as you are aware, unless somebody is a client of Axis Capital, I don't mention stock. I cannot mention stock calls on the media. So I can tell you sectors. I can tell you about caps in general. But we are in the business of making money for our clients. Second, this thing is PSUs, where I think the government has demonstrated. Modi has demonstrated in Gujarat that if you empower bureaucracy, PSUs will do well. Therefore, actually there were 3 reports that we released before the counting. One was on what large cap stocks to buy. There's a second report on mid caps, and there's a third report on PSUs, which PSUs to stick. So all these are available to our clients, and it's I think now it should be in public domain, and it should already be there with you.
Yes, in fact,
so
we do have that report, Nandan. I just wanted to point out on one thing that you mentioned earlier about leadership. In fact, it is good leadership that has been the biggest catalyst for this hope rally. It started off with Governor Rajan, it went on to Narendra Modi, and now people are hoping that the finance minister that gets announced on Monday will be in a good position to roll out some of the policies like GST, etc. What in your assessment, or who in your assessment could be a good candidate as a finance minister this time?
I don't want to talk about things which are beyond my competence. So I think
I'm just asking you for. As
a citizen, you have every right to talk. As a citizen, you have a right to make your choice.
Out of the two Aruns and the DPs and the other names that are obviously floating around, our finance minister is a very key post. Let us not speculate. Let us give some benefit of doubt to Mr. Narendra Modi that the person that he's been that the government that he's been able to manage for so many years in Gujarat and made such a success out of it, that he will do what is good for the country. That's the big hope. So I don't want to preempt that. I think the things that he's already done, for example, what has been announced in terms of gold, I mean that itself will dip the price of gold. And if you look at domestic investors, one of the hurdles has been the rising price of gold. Why do you invest in stocks when you can make more money in gold? So I think a lot of things will happen one after another, which are I think strategic in nature.
So
that's the hope.
Okay, Nandan, you can't give us stocks, and you've given us a bunch of sectors and the rationale. Can you give us an index level that you would be comfortable with? Say, a year down the line, what do you expect?
See, sure. Things could spike anytime in between or later, so, it's not this thing. But I would say that at this time, we are still fixated on a mid-teen EPS growth for FY15 and FY16. Obviously, once the budget comes out, we'll have a far better, understanding of what the interest rate position will be, dollar position will be, and so on and so forth. Therefore, we may, upgrade or downgrade whatever these EPS growth numbers. So, if you think that we are not in a peaking phase, then that means the mid-teen growth of EPS is anyway locked in. So, you have, let us say, a round number 15%. That's locked in.
Yes.
But as I told you, the first year is the one of multiple re-rating.
Right.
And if you look at the various sectors, I started only with the first one, where the PE will go up. I still have to go through 3 more investment strategies. So I'm saying the PE increase is obviously going to be far, far more than the EPS increase.
Okay.
So you have 15% going out straight as an average. Then you have at least 20-30% coming out of PE re-rating. And then if you choose well the right sectors, you have even more than that.
Okay. I just wanted your view
so
on...
what we can...
we can't discuss all 100 sectors at this point, but I'm going to try and ask you your view on 2 key sectors, power and coal, purely because there is talk of, a leaner council of ministries this time, merging of these sectors into one big, one omnibus ministry. On power and coal, what is your view on investment?
What we hear is that there are various, solutions that the government has already thought of in terms of, increasing the efficiency of Coal India by things which I don't want to talk about because it's still, in the works. But it's sort of there, in their manifesto, and they've said it in their speeches, how they will get increased efficiency from Coal India. And in the power sector also, in the banking side, the recapitalization of banks also, I think the banking secretary is already talking to a lot of people in terms of, what are the things that can be done in terms of banking recap. So I think basically it's power is round about 1 year away in terms of EPS growth. But as I said, you're not going to wait for that. PE growth will happen now. EPS growth will follow later. I think merchant tariffs also, more than merchant tariffs, I think PPA tariffs are likely to go up given the greater confidence.
Yeah.
So I think that's power. And what is the other one you mentioned? Sorry?
Coal. Power and coal, yeah.
Power and?
Coal.
Yeah, they're related.
Yeah,
they're related.
Yeah.
So I think, the valuations of both will go up. Let me come back to what I was saying because it's actually related to this. So I said the first group is there where you'll see a massive PE expansion, where you will have mid caps, you will have PSUs, which will become more efficient, and third is levered companies. So you will have recapitalization of levered companies, and therefore PE will go up in this broad set. So I think that's one focus. Second focus is cyclicals. I think among them the first to move will be consumer discretionary, followed by financials and industrials. And when I say first to move, I mean in terms of the growth. In terms of the valuation, it will be in exactly the reverse order, which is industrials first, then financials, and then consumer discretionary. The third group, which I want to point out, is the new economy, which is internet and so on, is only at its birth in India. Okay. Right now, there are only two, really good, listed stocks, but I think that's a good space to be in. And the fourth is people are forgetting pharma and IT because of the ghost of INR being at 50 bucks. Okay. From what our economists see today, the Axis Bank economists and the Axis Capital economists today, very, very unlikely that the RBI would, there'll be, that the $100 billion of, FII and debt and all that which ECBs and all that which come in is going to flood the market, and therefore the rupee will go to 50. It's a unlikely scenario. So much money may come in, but I think the RBI is building up reserves, and I think the rupee will be more between 55 and 60 than less than 55. Okay. Avoiding spikes. So I think you're going to get good ideas within pharma and IT too, though it's like catching a falling knife.
Fair enough.
So I think if you keep these in mind, then the sectors are, I think, quite clear. You will have the PE sectors which is largely in mid caps. And if you look at mid caps, generally if you look at mid caps, you will have NBFCs, agri-oriented, auto, internet, auto including ancillaries, consumer discretionary including media, etc., and logistics.
Fair point. That's an exhaustive
list. You did mention in the beginning about GST. GST will take time. GST is not for this budget. So GST needs the states and the center to agree. Yeah. So it will happen a little later.
Fair enough. Nandan, running out of time. Thank you very much for joining us with that exhaustive interpretation of how sectors and the economy itself can move. Thank you very much for joining us.